This is an introduction to the concept of corporate finance. First of all, by definition, corporate refers to corporation. You should have been exposed to the concept of a corporation in a prerequisite class. By way of review, corporation is a separate legal entity. It's a business that actually stands separate from any individual in terms of its legal identity. Ownership in a corporation is represented by ownership of shares, and they may be owned by very few number of people or a very, very large number of people. Shares can be exchanged, they can be given away, they can be bought and sold. And some corporations actually have shares which are traded in public equities markets, commonly referred to as stock markets. Generally, the way that a corporation is managed is that the shareholders elect a board of directors who have the responsibility of managing the corporation on behalf of the shareholders. Their primary interest is to watch out for the shareholders, and what they do is they hire senior management, they hire the chief executive officer, they hire the president of the company, and they make sure that the management team is doing things that are in the best interest of the shareholders. One of the attractive things about a corporate structure of a business is that the owners or the shareholders have what we call limited liability. When we talk about corporate finance, then we are talking about financial issues that are mostly of interest to the corporate world. Generally, these are companies of medium size and larger size, although many of the principles that we discuss here transfer very, very readily to small companies as well. Within the world of corporate finance, we concern ourselves with something called sources of funding. This basically means, where does your money come from? And the principal sources of money for corporations are borrowing through the form of usually bonds for long-term debt, and then there are several forms of short-term debt, and equity, or in other words, stock. One of the other issues is management of cash flow. Cash flow forecasts, cash management can be a very significant issue for a corporation and may involve quite a number of people depending on the size of the company. Investment activities require some attention, and there are many corporations that have very significant amounts of their money tied up in either long-term or short-term investments, and that can actually occupy quite a bit of certain individuals' time. There's a category of activity that we refer to as decision support, and this may involve financial analysis, which is folded into a broader context of perhaps making capital budgeting decisions. Where should the company invest its money in terms of products that it's planning to roll out, for example. Some of the skills that we need in the corporate finance world are, as you might expect, similar to what we would require in other areas of business, communication being number one. But it is very, very valuable for a person involved in the corporate finance world to have sound spreadsheet modeling skills and very well rehearsed analytical skills. And one of the most important skill sets to develop within the analytical skills area is the ability to identify what a key problem or issue is, identify possible alternative solutions, analyze them, and then make a recommendation. And by practicing these things over and over again, we can become very effective at functioning within the world of corporate finance.